All right. Hit it. It's April 17th, 2020, episode 76. I'm Patrick Ceresna.
And I'm Kevin Muir. This week, we are pleased to welcome to the show esteemed Bloomberg contributor and just an all-around fun guy, Barry Ritholtz. We talk about Barry's journey to Wall Street, discuss what he thinks is in store for the markets, and end with a great chat about his other love, cars. Next up will be my favorite segment, Talking Charts with Patrick.
And in This Week in Trading History, we look back at the market impact of the great earthquake of San Francisco. We're going to get Kevin to share a tale from the trading desk. We're going to watch a WTF video clip. And then we're going to end with the top 3 things to watch next week. So let's get to it.
Our next guest needs no introduction, but I'm going to give one anyway. Barry Ritholtz has been called the blog father of finance for his long-running site, The Big Picture. Barry has been writing and ranting about markets since 2003, and you can see him regularly on Bloomberg TV or hear him on his outstanding podcast, Masters in Business. Look for it in iTunes, Podcast, and Stitcher, wherever your finer podcasts can be found. Barry is now the co-founder and chairman of Ritholtz Wealth Management, where along with his partners Josh Brown and Michael Batnick, they host The Compound, a YouTube video show that features terrific content about markets, portfolio strategy, and the occasional style drift into hard-hitting topics like, why are the Knicks so bad? So without further ado, I present Barry Ritholtz. Barry, thanks for being on the show.
Thanks for having me. My favorite compound discussion is the proper pronunciation finance or finance? That was a hilarious digression.
So what was the outcome? What was the verdict?
I think it was a draw. I think it's a personal style, although say that on Twitter and you cause a huge war.
Say anything on Twitter and you cause a huge outrage. So Barry, let's get to know you a little more. I know you're a lawyer. How did you go from being a lawyer into Wall Street?
So I found I have like a weird background. I originally undergraduate at SUNY Stony Brook. I began applied mathematics and physics, a double major. When I started, the outgoing math chairman was some guy named Jim Simons, who was leaving academia to head over to some crazy day trading shop he was setting up called Renaissance Technologies. And by my end of second year, beginning of third year, I realized I'm pretty good at this math and physics stuff, but those guys are great. And I don't want to be in the bottom half of the pack. So I switched to poli-sci and philosophy and said, let me figure out what I could do with my life. Ultimately ended up going to law school, which I loved. The intellectual climate, the debate and rhetoric and philosophy is really quite fascinating. And then you graduate and go into the real world and find the practice of law is a hideous tedium from which there is no escape. I had a buddy who was running a firm that was the predecessor shop to E-Trade. I mean, at the time, I had no idea E-Trade was ever going to be a thing. But when he offered me a job, I took a tour of the trading room and I was sold. He's like, you're good at math. You're good at computers. You could be a trader. So I started as a trader and loved it, just absolutely loved it. Fortunately, I had enough self-awareness that I recognized that, roll up a sleeve, find a vein, and jab that needle in. I recognized how much fun that was, how much thrill that was. And I'll tell you, I can literally remember the exact moment. So on Tuesday nights, we would take the quote server that was used to serve the quotes for all the traders in the office and turn it into a Quake server. And this is early mid-90s. And the whole office would just do a shoot around. And, this was before massive multiplayer games were online. This is, almost 20 years ago. And I'm sorry, almost 30 years ago. Holy cow. And so I recognize that same sensation of getting lost in time. We would start at 5 o'clock and you look up and it's 10, 11 o'clock at night, shooting each other's with either the nail gun or whatever your favorite weapon was in Quake. But I recognized that I was getting the same thrill out of trading that I was out of Quake. And that kind of sent me down a rabbit hole, which involved a lot of research into behavioral finance. And this was pre Tversky and Kahneman before Kahneman won his Nobel, but there was still enough stuff out there that if you went to the library, you could find books on that. And I found Thomas Gilovich's book, How We Know It Isn't So, and it was just like a light went off. And that was, I want to say mid-90s, like 95, 96. And so I was able to recognize that I was a decent trader, but far too emotional and far too lacking in discipline to turn it into a true vocation. And then I took that realization and basically moved into research. I became the assistant to the chief technology strategist for a firm that then was Prime Charter. Eventually it merged or was purchased by Oppenheimer and Company. And so I worked with a gentleman named Larry Hart, who basically taught me how to do fundamental research. And a guy over there also named Guy Ortman, who taught me how to do technical research. And I wasn't satisfied that either methodology was by itself sufficient to analyze markets, but it was the beginning of a groundings in how to think about causation, what makes markets do what they do, how to think about forecasting, how to think about probability. Lots and lots of stuff that I write about comes from the early 90s experience that I had in finance.
Right. So let's talk about your writing. When did that start? Were you at Oppenheimer at that time, or were you had moved on?
So that started back in the firm that was the predecessor shop to E-Trade. I am inherently disorganized. I am just no attention span and lots of, as you will learn over the next hour, lots of digressions. One thing leads to the next, to the next, to the next. And so, again, a little bit of self-awareness goes a long way. I was very much aware of my own lack of organizational skills. And so I tried to do what I could to become better at that. And so in the mid-90s, every day before the market opened, I would pull together a list of, here are the expected economic data, here are the companies that are releasing earnings, here are the stocks that have just broken through a 20, a 50, a 100, a 200-day moving average, here are the potential things to watch. And in the process of putting that together, I would also come up with a list of a handful of articles that I wanted to read after the market closed. I never want to read about something before the market opened as a trader because it would influence you. And I don't want that to influence that decision-making process. So I would save these articles for later. And that list, I would literally take that whole thing, tape it up to my screen on the side. That started getting Xeroxed and shared around the office. Then that started getting faxed, and eventually it became an email that one of the guys in the office was shooting around to his buddies at other Wall Street firms. And this is, mid to late 90s. And eventually I started a blog on GeoCities just to kind of teach myself HTML. And I want to say that was 98 or 99, somewhere around there. And that was where I first started writing in public. Not that anyone was reading it. The most useful thing for GeoCities was that you could use it as this was before Dropbox, before G Drive, before any of the public cloud that existed. If I wanted to track a report or a chart or something I wanted access to later, well, I would post it on the blog, and that would give me access to whether I was home, the office, the summer house. It didn't matter. Anywhere I had an internet connection, I could access that later. It just became a filing cabinet. Lo and behold, a decade later, you have a ton of choices if you want stuff like that. But in the 90s, that did not exist.
Right.
That's Barry. I'm actually kind of fascinated. When you told me you were a lawyer, I didn't realize you were so technically proficient. I had no idea.
Yeah.
Tell me. Have you found that your math skills are something that you've used throughout the years, or are you more of on the behavioral side? Is your psychology or the math more important, or is it basically a combination of both?
They're equally important. I will tell you, my math skills. Anytime there's a heavy duty research report from some quant or an academic paper, I could keep up with the language up until somewhere around page 9. It just becomes pages and pages of formula. I tap out on that. I'm like, all right, I'm good. If I wanted to do this sort of crap, I would have stayed an applied mathematics major throughout all 5 years of college. So instead, I'm like, all right, I get the basic premise of this. To me, more important than being able to do the advanced calculus and derivatives work is understanding probabilities, understanding statistics, and understanding what makes for a good analysis. The guy who I interviewed who basically figured out that the hot hand is a thing, I was able to keep up with most of that math. That was, and he did a really nice job of dumbing it down, explaining it in a way that you don't need a PhD in mathematics to follow. That sort of stuff is really kind of fascinating. Look, the maths are important. I don't want to understate that. You don't need to be a CPA. You don't need to have a PhD in mathematics to be a decent investor, to be a decent financial advisor. But understanding probability and understanding statistics, that is just a must do. People constantly, and there's a huge overlap between behavioral finance and people's misunderstanding of basic probability theory and basic statistics. I could give you a couple of examples, but probably the best one is compounding. People are shocked at the impact of compounding over long periods of time. That is very much a behavioral component. We don't think well on a temporal basis. We're really bad about thinking about 30, 40, 50 years of 7% a year, what that does. And if you look at someone like Buffett, his returns have been so giant because all of the benefits of his half century of compounding have really come towards the back end of that. It really, and now when we're watching the exponential growth of the coronavirus, it's that same sort of thing. It's a compounding effect, and people have a hard time wrapping their heads around it. People are still to this day shocked at how rapidly the infection rate and the mortality rate has gone up. But that's what exponential growth is like, and it compounds and multiplies. And so you don't need a PhD in mathematics, but having some familiarity with statistics and probabilities is enormously important for investors.
Barry, what do you tell young people to study that are interested, like they want to be the next Barry Ritholtz? What would you kind of encourage them to take?
Well, we certainly don't need two of them, at least. So I believe you need to be both a generalist and a niche specialist at the same time. So I want to say about 8 years ago, I wrote a piece for the Washington Post called "The 5 Hats of Great Investors," and basically, or of good investors, and basically, you had to be one part psychologist and one part statistician and one part historian. And the part that people are always genuinely surprised about was the trial attorney, because you need to be able to understand the motivations and the veracity of someone selling you a product, pitching you on buy this market, sell this market, buy the stock, sell this stock, have this investment philosophy, don't. If you understand that everybody has their own motivations, they all have a product to sell, and you need the ability to cross-examine them before you take their advice. I'll give you a perfect example of the overlap between mathematics and the cross-examining skills. So I worked for a firm called Maxim Group after Prime Charter. Maxim Group was a really good shop. I'm still friends with a lot of the senior management there. And they were located and are still located in the Chrysler building. And one day, I want to say this was like 04 or 03, somewhere in there, we had some people come to us. It had to be after 03. we had some people come to us and pitch us on these funds that had the principal protected funds for the S&P 500. And they go through this whole process, and they were in, one of the bigger conference rooms, but it's still only, 60 people in there. The firm had, 1,000 people in that one office, and a few, I don't remember, like 1,500, 2,500 brokers in all their different locations. That's just from memory. But so we get through this whole process, and any questions? And so nobody raises their hand. So, of course, I raise my hand. And the first question I ask is, hey, these are great now that the NASDAQ is down 80% from its highs. But wouldn't have these been better in 99 or early 2000? Isn't it too late for this? And I get a whole answer of, well, there are people who don't want to assume so much risk, and they're affected by this, and it's a way to get their toes back in the market, and blah, blah, blah. And then the follow-up question was, well, what's the counterparty risk? We're buying this from you. How do we know you guys are going to be here? And I'll never forget the answer. The guy says to me, sir, Lehman Brothers is a 150-year-old bank. We were here long before you, and we'll be here long after you're gone. And I'm like, okay. And I eventually get called into the chief counsel's office over that. It's like, dude, what are you doing? We're trying to do more business with them, and you're basically telling people they're going out of business. And I said, I didn't say they're going out of business. I said it's a non-zero possibility they might go out of business. And in addition to giving up the upside to pay for the downside protection, which you don't need after an 80% collapse, why do I want to take the counterparty risk? Yeah, I know Lehman Brothers has been around, but I haven't looked at their books. And I mean, it could have been anybody. It didn't have to be Lehman Brothers. It just was dumb luck that I asked them, how do I know you're still going to be here? And they literally laughed when I asked that question. Like, it was unfathomable they might go away.
It didn't have to be Lehman Brothers, but it's definitely a better story because it was, Barry.
Absolutely true. Everywhere.
So let's talk about your career on Wall Street, because now we're entering what I'm assuming this is your fourth major correction, the longtermcapital.com, great financial crisis, and now COVID. Is that correct?
I was in grad school during 87, so I like to include that. And 73, 74 was around the time of my bar mitzvah, and I think it affected the quality of gifts I got.
Okay. So you're taking some liberal kind of interpretations of how many crises you've been in. But why don't you walk through the kind of your experiences and what you've learned through all these different crises in terms of how has the Wall Street changed since longtermcapital.com and then great financial crisis to today? What have you noticed that's been different and or the same?
So this is a joke I have to retire because I've been using it so much lately. But these 100-year floods that come along every 12, 14 years, I think we need a better name than 100-year floods. And I not making it up, I cringe every time I hear somebody say that on financial TV. Well, this is a 100-year flood. How does this 100-year flood, I said in 08, 09 to someone on TV, compare to the one we had 8 years ago? Is this similar to that 100-year flood, or is this different than that 8-year prior 100-year flood? So first, probably the most important thing is for people to realize that this is a feature, not a bug. This is an all too regular occurrence, 2020, 2008, 2000, 1987, 1974. These happen regularly. The only good thing about the 29 crash and the Great Depression is you didn't get another 50% haircut for quite a while. So you just, aside from that, Mrs. Lincoln, how was the play? So you had a horrific, worst ever depression, and it prevented other collapses for at least a couple of decades. And now that, so that's the first thing I would say is this is a regular occurrence, and you have to factor into your risk tolerance and your models that these things occur on an all too frequent basis. So that's one thing. The second thing is, and people forget this, down 50% is a fantastic place to buy stocks. And every time I say that, someone always says, What about Japan in 1989? Well, thank you. That's the one exception that proves the rule. What about the Weimar Republic? No, the Weimar you want to be short in. But in every other case, you want to be a buyer of stocks down 50%. So that's the other thing to channel Solomon. This too shall pass. The ingenuity of human beings, the resilience of the U.S. economy and markets, despite our best efforts to destroy the country, so far the institutions of the country seem to be holding up pretty well. People forget 08, 09 was just relentless. It was relentlessly brutal and relentlessly bloody. I mean, people just don't really remember what a monstrosity that era was, and that every day the news flow was horrific and there was no sign of a let up. And even those 18 months from the peak in October 07 to the low in March 09, it just was unbelievably relentless. We're 4 weeks through this? This is still very early days, if this is anything like that, and we're hoping that this is nothing like that.
And
but
so
what
let's
if it is though? Like in terms of like what if this creates a domino effect where the fact that so many people are becoming unemployed, that those jobs won't come back as quick and the economy doesn't recover as fast, and therefore it has to start being priced in. Like, what if this gets drawn out? Do you think that's a risk?
It's always a risk, sure. Let's assume that there's no treatments, no improvement in tests, no vaccine, and that the numbers we don't flatten the curve, the numbers continue to accelerate, and this just goes on and on and on. At a certain point, the look at the 1966 to 1982 period where you see this bear market that lasts 16 years, and the market kissed 1,000 in 1966 on the Dow, couldn't get over that level till 1982, and that was a period of high inflation. So if you want to think about what a worst case scenario is like, hey, that era is pretty substantial. I don't want to start drawing comparisons to the Depression, but that the worst case scenario that I've seen some people talk about, not necessarily endorse, is something like that. But so far, all the data we're seeing says, first, the other countries who had for prior exposure to this, they've all managed to flatten the curve. They've seen a peak in the infection rate. They've seen a peak in the death rate. The number of infections starts to go down, and eventually you get a handle on this. So far, I just read as the same things other people have read. Some of the things that I've read have discussed some really interesting potential tests, treatments, and potential vaccines. That there was just in the Washington Post a number of vaccines that are now early stage testing, which is a hopeful thing. Abbott Labs had their quick, very fast test. I know a biotech firm in California that's working on a spit antigen test that from your saliva they can identify if there are antigens. That's being worked on. You had a huge announcement earlier this week from Pfizer that they think they have the makings of a treatment, not necessarily a cure, but a protocol that will allow the disease to be managed away from a fatality and towards something where there is a recovery, if not a full-blown cure. So all this stuff is hopeful and make me optimistic that the worst case scenario isn't going to come to be. We talked earlier about a little bit of road rage. I'm having a hard time managing my fury at how much of this is simply unforced error and self-inflicted wounds due to just a inept, hapless response on so many levels. But, the buck stops at the top, and the gang that can't shoot straight are going to, before we're done, we're going to end up with an ungodly number of American deaths. It's shocking where we are today. The daily mortality studies are showing us that on any given day since April 8th, the highest number of deaths, the highest cause of deaths in America for that day is the coronavirus. That is just mind-boggling and shocking to me.
Why don't we talk a little bit? Why don't we find you something to rant about on Wall Street? What pisses you off on Wall Street? What do you look at and say this is something that just needs to be changed or fixed? What is the equivalent transgression from Wall Street?
I have a list of peeves I kind of write about pretty regularly, none of which are matters of life and death. So my frustration and anger doesn't rise to that other level. Listen, if you think that low-cost index-based investments are Marxism or going to destroy the economy or ruining price discovery, you're free to believe whatever the hell you want. And the difference is your clients are not going to do as well as someone else's clients who understands that low-cost indexing is, for 90-something% of people, the best route they have. So I can't quite get that upset when I read a bunch of people whose income, it's the old joke, it's difficult to get a man to understand something when his salary depends on his not understanding it. I think that's the concrete jungle, the quote from Upton Sinclair. So it doesn't surprise me that sell-side researchers and active mutual fund managers have a hard time recognizing that they were very pricey, and they didn't provide a lot of value. I've whined over the years about hedge funds. Come for the high fees, stay for the underperformance. But the reality is, there are a handful of hedge funds that actually do create value. What makes the world so fascinating, aside from what you will read on Twitter or see elsewhere in the social media universe, is very few things are binary. If you flip a coin, it's heads or tails, except the 1 in a billion times when it comes up on its edge. But we'll call that binary. Most things aren't binary. Most things are more complex. They're more involved. Causation is a very nebulous thing to demonstrate, and especially because we don't have a laboratory where we can run counterfactuals. We don't have the ability to say, okay, what happens if we didn't bail out Bank of America in 08, 09, or Citigroup, and just let them go through a normal Chapter 11 reorganization? Bank of America is my favorite example. So we would have taken all the bad debt that Bank of America had accumulated through its acquisition of Countrywide, through Merrill Lynch's securitization, take all that stuff, and we would have sold that. I'm fond of saying there's no such thing as toxic assets, only toxic prices. So all that crap, all those bad paper would have sold for, pick a number, 18, 22, 31 cents on the dollar. So there's some value of it. Now you have a clean, well-capitalized company. You spin out Bank of America as a freestanding Main Street bank. You spin out Merrill Lynch as a freestanding investment bank. You spin out Countrywide as a freestanding mortgage underwriter. You take all those different divisions plus dozens others they had accumulated. And maybe the Dow keeps going from 65. Maybe we go to 4,800. Who the hell knows? But you end up with a finance system that's cleaner, healthier, better capitalized. The Fed isn't forced to keep rates ridiculously low for a decade in order to allow the banks to let all those bad mortgages run off. The massive wealth disparity that exists in the United States wasn't exacerbated by a mostly monetary stimulus as opposed to a traditional fiscal stimulus. Fiscal stimulus, like you saw in the Great Depression, hey, that creates a lot of jobs and a lot of good middle-class jobs, and it actually works to reduce wealth inequality. Making rates zero, well, if you have capital and you own assets like real estate or equities, well, the stock market, even today, the stock market is up 4x from the lows in March 09. So the wealthy did okay with this. I used to love watching idiots go on CNBC and say, you are destroying wealth by keeping rates at zero. You are punishing savers and investors. Oh, 400x over 10 years doesn't sound like investors got punished too much.
Right.
There's lots and lots of stuff to rail against, some of which is really frustrating. I'm right now today, I just happen to be in the middle of a stupid debate about share buybacks. Again, buybacks are one of those things. It's much more complex. It's much more nuanced. You have the quants on one side insisting it's the greatest thing since sliced bread. And then you have Elizabeth Warren saying it's terrible on the other side. The truth is it's somewhere in between. It is a form of financial engineering. My research has shown me that most people that engage in stock buybacks, for the most part, overpay for equities. It's mostly used to replace a lot of stock that's given to employees as employee stock options, as well as senior management, rank and file employees and senior management. When you compare companies that do stock options, that do stock buybacks versus those that don't, it does give them an advantage versus the non-buyback companies, some of which may be a correlation because if you can afford to do buybacks, you're probably doing better anyway. But also, you're lowering your share count. You're making your company appear to be a lower PE by doing that. And so there are advantages on a relative basis. But I could show you so many examples, not just one or two anecdotes, but example after example after example of companies that spent a lot of money on stock buybacks that really should. GE is probably the poster child recently. But I remember in the 90s and early 2000s, the Dell computer spent more money on stock buybacks than they earned in profits the entire time they existed. So that is a fact. I'm not making that up. What is the purpose of that other than to drive Michael Dell's stock price higher? And he became a multi-billionaire. He's one of the wealthiest people in the world. I used to love, they would do these press releases. He was buying Michael Dell announces a $10 million personal investment in Dell. $10 million. The guy's worth $20 billion. That's like me spending $48 on my own company. It's relatively nothing. But again, having a little bit of math is helpful with that. So
right.
The buyback situation is more nuanced and more complicated than either side makes it out to be. It's come up in the context of the airlines today. There was a Bloomberg article a couple of weeks ago that said in the prior 5 years, airlines have spent 93% of their free cash flow, not their profit, their free cash flow, buying back stocks. And now they all need a bailout. Now,
so
when you
Barry, can I interrupt for a second? I just want to ask you a question. Let's talk about those bailouts and let's talk about what they look like, because I think that too often we're bailing out the equity holders where we should be zeroing these equity holders before we even start to think about bailing people back. So what
I'm with you. The argument you're making is, hey, that nice building downtown with the columns, that's the bankruptcy court. And you guys have lots of assets. You own planes. You have slots, which are very valuable at airports. Go there, do a Chapter 11 reorganization. I'm really sorry. Tell your shareholders we're sorry, but so long. And now the bondholders own this, and let's see what we can do and reconfigure. I don't have a problem with that. I mean, it's a challenge when the government says to everybody, stay at home, don't go to work, and airline traffic drops 90% as a result of a government action. It's a little more challenging to say, hey, you guys, go to bankruptcy court. So,
but Barry, I don't think it needs to be as drastic as going to bankruptcy court. But like until you zero the equity or basically dilute it down to nothing, should we really be talking about buybacks? Like, let's just put an at the money issue out there and sell it so the stock gets down to zero. And then once that stock is zero, we can talk about what you need. But see, too often I think that in these
who's out buying airline? Who's going to be out buying airline stocks today?
Well, Barry, they did Carnival. They issued stock in Carnival Cruises. Who was going to buy one of those? Someone did.
Remind me who the dumb money was behind that.
I don't know. Who was it? You tell me.
Wasn't it the Saudi sovereign fund?
Did they buy the equity?
From the people who brought you WeWork comes the latest investment in Carnival Cruise Lines. Yeah, I'll take the other side of any trade those idiots make.
I just feel that you should zero the equity before we bail people out. I think that this is the problem, is that we're bailing out equity instead of bailing out bondholders, which I think are two different things.
So to me, I wrote a really long piece about how good of an investment were the bailouts in 08, 09. Because Uncle Sam took an unbelievable amount of risk in order to basically get back to break even. Hey, thanks for nothing. So I think that whatever you do with Boeing, whatever you do with the airlines, we're spending a lot of money, we're taking a lot of risk, and I want some warrants for that. I think the government, sort of what Buffett did with Goldman Sachs, and I think, was it Wells Fargo was the other one he put some money in, as well as Salomon Brothers in the 90s. I think Uncle Sam should get a chunk of cash, just like we did. Hey, the GM bailout of 2008, along with Chrysler, that was effectively a bankruptcy. That was a much better bailout than the 1980 rescue of Chrysler, which all it did was just kick the can down the road to an eventuality. When you have a company that's structured very poorly, that has a lot of debt, that has a lot of overhang, the bankruptcy reorganization is a better choice. And the banks in 08, 09 were a perfect example. I don't think these airlines have a ton of debt relative to where they were. And to be honest, $12 billion in bailouts over 5 years, what are they losing? $30 billion a quarter? It's not going to help them, given the giant drop in revenue. So it's not an exclusive solution, but I would like to see something that is less generous to people who couldn't be bothered to think about having at least a little bit of a buffer against some sort of a collapse. There's your moral hazard. Hey, we're going to do everything we can. We're going to put the pedal all the way down. I've jokingly said, if you set the course straightaway, if you set the course speed record on the straightaway, but you're going so fast you can't make the turn at the end and you smash into the wall, that doesn't count. You don't get to have the course record. You have to make the turn and not die in the wall at the end. And when you're running that lean with no buffer, there's got to be a penalty for that sort of aggressive risk taking. We want entrepreneurs to take risks. We want companies to embrace a rational level of risk. But 100 to 1, 25 to 1, that sort of equity risk on a hedge fund or on a bank is sort of similar to what these airlines were doing. They seem to be they were so concerned about return on invested equity, they did not want to leave any penny unturned, and that turned out to be a very risky strategy.
So, Barry, this is Patrick here. I want to just kind of take this even bigger picture, because you were talking about indexing and this idea of low fees. And in the high yield market, we had junk bonds being put into these ETFs. And obviously financing the lower grade debt is an important part of capitalism and the way that we structure everything. The Fed now is coming in there and kind of rebalancing what's going on and entered buying in on the high yield market as a part of their QE. Like, how does this kind of compromise, or what's your opinion on how this has all come together? Like, is this not have some unintended consequences for the Fed getting involved in high yield?
I'm a little skittish about it. In 08, 09, when they just kept rolling out one acronym, credit buying facility after another, I jokingly said, if you have any old lawn furniture, you could securitize it and the Fed will buy it from you. The concept of the Fed's involvement in high yield junk paper, I'm not especially comfortable with that. The liquidity issue within the marketplace, that's one thing. But overall, the idea of lending against good collateral at a high rate, that's not what this is. This is lending against crappy collateral at a very low rate. seems to me that that's an unnecessary risk from the Fed. And I want to just distinguish between the liquidity issues and the credit issues. I'm all in favor of the Fed acting as a provider of liquidity where it's needed. I just think we have to be very selective as to where it really is needed.
Right.
So, Barry, are you giving the Fed what grade would you give the Fed, apart from this high yield stuff?
I thought they went to zero way too quickly.
You do?
And at the time, this time, yeah, I thought they went to zero way too quickly. And in fact, when they did a between meeting half point and then the next half point, before this really had blown up, they said nobody is not going to Disneyland because rates are too high. The rates are not relevant to this. And just look back to the recovery from 08-09. They stayed on an emergency footing for way too long. We still, prior to this 2020 event, we still had normalized rates in any reasonable basis. And that has all sorts of unintended consequences. Wealth inequality, the least of it. There are ramifications for the 08-09 bailouts that we still haven't deciphered what they're going to be. So going to zero instantly seemed to me like a bit of an overreaction. The liquidity side, hey, that's great. But everything else, I got to say, it was a bit much because I don't see how they're going to get out of these ultra low rates. Again, it's going to be years and years and years. They kind of painted themselves into a corner. So that's my big criticism.
You would almost argue they should have fixed the quantity, like meaning that they should have bought QE, but they didn't need to change the price so much.
That's right. And look, if you want to announce a half point just to shake people up, you can do that. I wish the Fed had a policy of every time they do a rate cut, they build in a automatic sunset. We're taking rates down 50 basis points. This will expire in 18 months. If they did something like that, it would force them to get out of it. The market would take care of it themselves for them. They wouldn't have to do anything. And it would certainly be an interesting experiment. The other thing that's worth pointing out, the big failure of the 08-09 bailouts, I don't mean after the decade afterwards, I mean the actual bailouts, was that they were monetary policy did all the heavy lifting, fiscal policy did almost nothing, and that's very, very significant. We had a teeny tiny fiscal stimulus, a modest extension of unemployment, a modest tax cut. All told, it was $700 billion, and none of it really had any sort of Keynesian effect of replacing demand that had fallen off a cliff from the household and the business sector. So the good thing about this current $2 trillion plus from the Congress and then $2, $3, $4 trillion from the Fed is that it's closer to a 60-40 or 50-50 split between fiscal and monetary. And historically, that has been a better way to go about rescuing a country from a financial crisis, even one caused by an externality like a pandemic.
Right. So, Barry, you're actually preaching to the choir there, because I talk about the fact that if you look at the U.S. federal discretionary budget for the past 4 decades, and if you look at the year-over-real change, you'll notice that only 3 years before the great financial crisis saw declines. They were 64, 68, and 96. Then, once the great financial crisis happened, there was 5 years in a row that they were cut. People don't realize that not only was fiscal not helping the situation in the great financial crisis, it was actually doing pro-cyclical cuts. It made it worse.
There are swaths of people who have been hiding behind balanced budget and deficit cutting, which they use as a weapon. It's pretty obvious from the Bush and the Trump administration that Republicans are okay with deficits. They're okay with spending. I have come around to the conclusion that they are very comfortable with forcing either a worse than usual recovery or a recession if it hurts the opposing party politically.
Right. So, Barry, you just mentioned that this response is a lot better in that it's not just relying on monetary, it's also got a huge fiscal component. Given that, do you worry about inflation?
No.
No? Why don't you walk us through your thinking there?
Show me signs of inflation anywhere.
Well, so do you?
By the way, do you remember the letter that was published by the Wall Street Journal, 2011?
The open letter to Ben Bernanke. Yeah, and it was all sorts of things.
Hyperinflation is coming. You're going to destroy the dollar. All right. So what have we had in the decade since? So the dollar is now the dominant currency of the world by a long, strongest currency out there. We've not only not had hyperinflation, we've not had inflation. It's been mostly deflation or disinflation. The belief system that deficits cause inflation is belied by negative interest rates around the world, including Japan, and we're the highest yielding rates in the world, or at least in the industrialized world. So let me know if you see signs of inflation somewhere. I have yet to see any evidence of that. If people are willing to lend Uncle Sam trillions of dollars at 1%, it's hard to see how the marketplace sees any sort of inflation coming for more or less hyperinflation.
So, Barry, I don't disagree with you. I would argue that the reason that we didn't get inflation in 2008 or after 2008 was what we just discussed in terms of the government wasn't spending. So at a certain point, if the government does spend, they're going to crowd out. And you could argue that point is far away. I completely agree. But when you see these moves towards a kind of more of a liberal spending on the government's part, does it give you any pause for concern? Or do you think this is just going to be a minor thing and we're going to try to go back to balancing budgets after we get through the COVID kind of crisis?
So to paraphrase Richard Nixon, we are all modern monetary theorists today. Yeah. Now that we've learned, Japan, what are they, 235% GDP to debt ratio? That the debt to GDP ratio, the United States is about 104%. The bond vigilantes we used to hear about in the 70s and 80s, that's a theory that's now gone away. The idea that government spending and deficits crowds out capital when the Fed has the ability to create an infinite amount of capital, that old theory is no longer seen to be valid. Hey, one day inflation is going to come back, and we'll start to see signs of it in a variety of places. But with oil in free fall and with people forced to shelter in place, it took, not quite a decade to return to our pre-crisis levels of employment. I'm hoping that the recovery from this is going to be closer to 2 years, year and a half, something like that, not 6, 8, 10 years. But that said, maybe we get a surge of inflation. Everybody gets rehired and 330 million Americans with cabin fever and pent up money in their wallets go out and spend furiously. I mean, maybe that causes a blip in inflation. But so far, the 800-year trend is for interest rates and inflation to go lower. And I don't see any immediate signs that trend is in danger of breaking.
Okay, so next question I have for you is that many people are proclaiming that the world has changed in XYZ place because of this COVID crisis. Do you see anything that you think that has permanently changed or society's attitude towards certain things?
I think certain trends that were in prior existence have been accelerated. I used to work from home on Fridays between, Memorial Day and Labor Day. And then, Friday's a quiet day in the office and a lot of people aren't around and you want to get a jump on the weekend. So I found, I could work at home till noon and then tap out. And then I started extending that, just about every week, the rest of the year. And then we discover, wow, I really only work 4 or 5 hours a day. maybe even less, coming into the office for 8-10 hours a day, plus the commute. That's a colossal waste of time. I think a lot of people have discovered that. How we shop, the various things we do along the lines in terms of retail. I think people are discovering that there are companies that sell stuff online who's not owned by Jeff Bezos. It's not Amazon, and I'm a giant Amazon fan. We use them all the time. But people are discovering other options, Peapod, Instacart, whatever. I tried to order some potato chips. We have nothing but healthy food in the house because that's what we ordered when we did our emergency shopping. No crap, just get real food. And it's like, you know what? I could use a little junk food. Amazon will deliver to me in May, but I went to Google Shop and I found a place that will drop off a giant box of Sun Chip in multi flavors in 4 days. And I have to imagine that other people are similar. The liquor store now delivers. In New York, they're an essential service. I am not making it up. They were declared an essential service. And wait, I don't have to go to the liquor store? They'll just bring this crap over to my house? That's fantastic. You start thinking about the design of your house. My house, I'm fortunate that I have a really weird, contemporary, long, narrow house. I'm upstairs in a bedroom converted to an office. My wife is on the opposite side of the house in a den. You start to think about, hey, if we're stuck here, how are we going to get by? Because of my experience with Sandy and having no electricity for almost 2 weeks, I think it was 12 days, when I moved into this house, the first two things I did, this was about 6 years ago, was convert from oil to natural gas and then have a giant whole house Generac gas generator installed. And it's not that I'm a prepper. It's not that I think I'm going to have to live off the grid for months at a time. It's that I'm not going to ever put my family in a set of situation where there is no electricity available for 12 days. Hey, you know what? Screw you guys. I'll make my own electricity. I got this. It's essentially a V8 diesel engine in a big box, and it's hooked up to the house. And as long as they're pumping natural gas, I'm good. So those sort of adjustments to past crises, I think we'll see similar sort of stuff. We've learned that this just-in-time inventory stuff is just bullshit. It might help your returns because you're not tying up a lot of capital, but it's a horrible way to exist. And whether that means everybody becomes a prepper and has a month's worth of frozen food. Before this happened, I bought a freezer because we have a side-by-side fridge in the house. By the way, we're recording this in April. The new kitchen the work was supposed to start March 15th. So that got put on hold. But recognizing that we weren't going to be able to do the new kitchen and having a tiny side-by-side freezer, I just went to home. I didn't even go. I ordered online, Home Depot, and a 17 cubic foot freezer shows up and it's in the basement, not for prep stuff, just because I had to decide, did I want frozen shumai in the freezer or did I want ice cubes, but not both. Now I have ice cubes and dumplings, and it worked out to be, this is nice to have in case we don't get to go shopping every week. I think that sort of, not prepper guns and ammos and bottled water for a year, but just, hey, it's nice to have a couple of weeks of supply on hand in case something wacky happens. Things like that, you're going to start seeing change in. I'm friendly with and a fan of Professor Scott Galloway, and he talks about the terrible deal that a lot of higher education provides to students. This is going to accelerate shifts in higher education. And I think this is just across the economy, lots of things that were problematic, like retail, they're going to see the change that would have happened over the next 20 years take place much, much more quickly than it would have otherwise.
Right. Okay. So Barry, before the show, we were chatting and you were saying that the young people in your office are fed up with your war stories. Well, we haven't heard them. So I was wondering if you could share one or two with us.
I don't even know where to start. It's funny. I'll start telling a story, and you could literally hear their eyes roll back in their head. It's like, did you just roll your eyes at me? Is that what happened? Don't I set your paycheck? I can't believe I heard that story that many times.
It's like me talking to my kids. It's the way it works.
So yeah, I'm the gray hair in the office. Most of the people in the office are not just younger than me, but much younger than me. And think about it. If you're in your late 20s, right, you started in this business. Forget 87. Forget the .com. You started after 08, 09. You really haven't lived through fun until you're, up to your armpit in positions in 08, 09. Even if you're on the right side of the market, it still was harrowing. We were short CIT, we were short AIG, we were short Lehman. And I remember thinking, oh my God, how can I stay short this? Every week it would run up in your face. It was so painful. I since have learned the way to do that is you marry a put to your short position. And if you get squeezed out, you don't care. You just let the put ride. That was an interesting education. Same thing with Enron. I was not short Enron, but I watched it took a year from when the first stories came out. And Bethany McLean was one of the people who broke those stories along with some people from the Wall Street Journal. When those stories came out and it was clear that there was lots and lots of evidence that Enron was a giant fraud, it took a year to collapse. I mean, it would fall and then run up 20, 30% and then fall and run up another 20%. So all of these things take much more time to unfold than people imagine.
So, Barry, I got to tell a quick story about how I met you. I don't know if you remember, but I had written a piece for my Macro Tourist, and in it
Sure.
Okay, and in it I had basically vaguely referenced you, and it was because you had said something mean about another, not mean, let's just say aggressive towards another famous FinTwit guy, and I had basically kind of referenced this, and I said something to the effect that both of these guys could are wealthy enough to buy me out like 10 times, and one guy for sure because I've seen the pictures of the cars that he keeps tweeting. And so I wrote this piece, and it's funny because at the time I probably had 1,000 different Twitter followers, and I look in my notifications and I see Barry Ritholtz follows you, and I'm like, whoa. And then I look, and it's all of a sudden I get this direct message. Hi, it's Barry. Can we chat? And I'm like, oh my God, what have I done? Right? Barry's pissed at me. I never even met this guy. So we end up chatting, and you were like a super nice gentleman. You just wanted to understand. You were like, listen, I shit all over these guys all the time. Why are you guys so offended by this time, by this one thing? But
who was that shitting on? Remind me.
It was Raul Powell from GM from Real Vision.
Oh, okay. So it's not that I was shitting on him. It's that that's recession porn. That's apocalypse porn.
Right.
Like when you're predicting the end of the world continuously. I mean, how we just said the market's up 400%. And by the way, we know some of those guys. They're nice guys.
Yeah, listen, they're great guys. Everyone, that's what makes a market. But it was funny because the one thing was I remember me saying, but I didn't even reference you. And you said to me, Kevin, we all know you were referencing me with the car thing. So let's talk a little bit about cars. I must admit,
before we talk about cars, I just have to confess something. So I started doing something a year ago, January 1st of 2019. And I said, I'm going to make a conscious effort to stop picking fights on Twitter, to stop shitting on people, to stop. And I love to get into fights with people like Cliff Asness, who I adore. I mean, we are on the opposite side of everything, but he is just a blast to cross swords with. But a lot of these, they're just silly, goofy, so I said, I'm going to make a conscious effort to not fight with people. And if you look at my Twitter stream from January 1st forward, you'll see instead of just saying, you're a fucking asshole. You don't know what you're talking about. I've replaced that with, don't you think you're reducing a complex situation to a simple binary outcome without considering the myriad of various factors and unseen forces that are playing on this, which people think are more intellectual than you're a fucking moron, but essentially it's just the G-rated version of the same thing.
So Barry, when you give me one of those, I'll know you're just calling me an asshole. I like it. Okay, so let's talk about cars, because you have a love of cars, and I got to ask you, you hate, if I got it right, you're not a big Porsche fan, right? Why don't you walk us through your love of cars?
First word ever spoken, according to my mom, car. And I don't know what it is. So you and I are not that far apart in age. When I was growing up, there was no internet. There was barely cable. And if you lived in suburbia, you were in prison. And the big city was the lure. And all the early Springsteen albums about, baby, we were born to run. I want to get out of here. That whole genre is, if only we had a car, we could get out of here. Paradise by the Dashboard Light. Go down the list of all the bands from the 70s and 80s. And a lot of that is how an automobile represented mobility and freedom. Plus, it's fun to drive fast. And lots of cars are incredibly, incredibly beautiful. And so I was never a Porsche fan. Porsche is a brilliant engineering firm, but their entire engineering prowess comes about for having to compensate for an engine that is absolutely in the worst possible place you could put it, behind the rear axle. That's a terrible place for an engine. You want to put an engine someplace, put it between the two axles, pretty low, affect the center of gravity, affect the balance, do all these things. Having an engine hanging on over the rear axle or out behind it, and lots of early Porsches before the computer-controlled electronics came in, they were widowmakers. I have a T-shirt that says "Never lift," and what that means is if you go into a turn in a 911, especially one of the older pre-computer versions, and you feel the tail coming around, what you have to do is totally counterintuitive. You have to step on the gas to push your way out of that. If you take a little bit of foot off, if you take a little bit of gas off, lift your foot, well, your tail is going to come whipping around, and hopefully you stop on the hay bales, not the tree. Porsches were notoriously tail happy that way, and you really have to be a professional, a skilled driver. One of the things my wife did early in our marriage was send me to Skip Barber Performance driving school for a couple of days of classes. It's awesome. I recommend everybody do it. And if your brand of car, BMW, Porsche, Mercedes, they all have their own driving schools. Ferrari, Aston Martin, any of the higher end cars have a driving school. It is so much fun. And you learn the problem with most people who get into accidents, get into trouble driving. It's not that they were driving too fast. It's that they were exceeding the parameters of that vehicle and their skill. So if you bring your skill up, you're much less likely to end up in trouble. So, and one of the highlight of my shelter-in-place stay is if it's nice enough out, I'll take one of the cars out and just go for a ride. There's very few people on the road. I have some favorite driving routes I like to take. There's almost no cops out. And if they see you, they don't want to pull you over and speak to you. You're basically, you get a pass. So I've been, and I'm so happy on the BMW. I just put new tires on it before the winter, and I just have been breaking them in over the past couple of weeks. I'm out trolling some of the auction sites, looking for deals in this environment also. I wrote something in late 08, early 09 that said, hey, make a list and now's the time to start buying distressed assets. I didn't do what Howard Marks did. He was smart enough to say, let's raise $3 billion and buy distressed assets.
Right.
I told people, go buy some houses and cars that are otherwise too expensive, that are trading at a substantial discount.
Right.
Okay, Barry, you got to give us your favorite car. So if I gave you unlimited budget tomorrow, what would you go buy?
So for looks or for driving?
Give us both. Give us both.
What would you buy? What would you buy?
Yeah, give us both. Give us both.
Unlimited. So the early Bentley Continental GTs, like the 05, 06, 07, which I don't want to own because they have transmission issues and other headaches. That is incredibly handsome. So is the early 60s Jaguar XKE. But the late 50s, early 60s Ferrari 275 long wheelbase, they now go for insane money. I mean, tens of millions of dollars. It's so idiotic. But this is the car with the headlights with the long covered glass covers, the shark gills down the side. They're just so spectacularly beautiful. There's really no other car out there. The 275 is just, it's a spectacular vehicle. In terms of just pure driving, so intellectually, I understand the Tiptronic, the dual clutch paddle shifters are faster, or just let the computer do it than a stick shift. But I really like shifting my own gears. So the Audi R8s, which now come in a V10, even like 2014, 15, 16, they're stupid expensive new. By the way, all these cars you see me talking about almost always are used. And I like the idea of buying a $130,000 car for $60,000 or a $200,000 car. I was bidding on a California Spider T that car is normally $200,000, but they had a special edition. I'll send you a link to this. This car is unbelievably beautiful. They had an anniversary edition. So some lunatic took a $200,000 car and he bought it with $190,000 worth of additional options. So he practically doubled the price of this car. Special paint, it is the most spectacular, beautiful thing you've ever seen. And I thought, all right, if I could steal this for $95,000, I'll do that. And P.S. it ended up selling for about half of what it cost new, which is still, by any stretch of the imagination, a good deal. But you don't have to spend a lot of money to get a fantastic car. That's the fascinating thing before everything shut down. There are amazing cars to be bought for $25,000, $35,000, $45,000. Me and a friend started importing for our own use. I don't know so I have a Jeep as sort of my utility vehicle, a Jeep Rubicon in the most ridiculous orange crush is the color. I bought it with a salvage title. I paid nothing for it, and the thing is just unstoppable. But if you look at the 70s era vehicles, Toyota made something called an FJ40. It was the choice of drug lords and terrorists everywhere, because you just can't destroy these cars. They're literally unstoppable. And they found a new life in the collector market, and they go for $40,000, $50,000, $60,000 refurbished in the U.S. But I'm finding them in South America for a fraction of that price. So me and a friend were going to import two. He imported the first one. It was a soft top. If you saw a picture of this, you'll absolutely recognize. You'll say, "Oh yeah, I've seen those everywhere."
I see it. They're $100,000 when you fix them all up.
Well, if you put a stupid V8 in it, then you have crazy.
Yeah.
But you can find them for literally a fraction of that price elsewhere. I see them for 30, 40, 50 on a regular basis, and if I could pay half of that, I'm a happy camper. So I was about to import his came in. It was red with a soft top. I wanted the sky blue with the white hard top, and then this happened, and so my importing experiment from South America has ground to a pandemic halt. And the nice thing is it's about the same utility as the Jeep, only, the collector car insurance is $200 a year instead of 10 times that for the Jeep.
Wow. Well, Barry, on that note, we're going to say goodbye. Thank you so much for being with us. It's been a real pleasure having you on and hearing your stories. Where can people find more about Ritholtz Wealth Management, and where can they find you on Twitter?
Sure. So at Ritholtz is my Twitter handle. Ritholtz.com is the big picture. Ritholtzwealth.com is where the firm is. If you go to YouTube and search for The Compound, you'll see all of our videos. We put up a couple of videos a week. Some of them have gone kind of viral, 50, 100,000 views. Any of the more interesting ones tend to do 20, 25,000 views. It's a fascinating outlet for a very different audience. If you want to talk to people who are under 40, they may not necessarily be sitting on the couch watching CNBC or Bloomberg television or Fox Business. They're busy online. And so, our business model, which kind of was an accident, was provide people really high quality content for free. And if anybody's interested in coming along and hearing what we have to say about how we manage assets for people, well, you know where to find us. And that has been a fairly successful approach.
Well, I can attest to that. I love The Compound. I watch it all the time. I thought it was really interesting when you guys went to the YouTube model, and it's something that we do as well, and completely agree. It sounds a little crazy. It felt like something that only my kids watch, but I realized that there's somewhere between Barry, you and I, our age group, and our kids, there's a whole bunch of other people that are actually watching YouTube. Anyways, thank you very much for being with us. It's been a pleasure having you on.
Thanks, Barry.
Thanks for having me.
Okay, Lena, hop on.
Hello.
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 So again, no beer sponsor.
No.
I think everybody's rating the fridge, right?
We have many beer sponsors lined up, but we have a channel distribution problem. Logistics.
we do have a logistics problem.
So we're being creative with our drinks, right?
Yeah. That's right. So what's everyone drinking? Lena, let's start with you.
I'm drinking leftover Prosecco and ginger ale.
Nice. What's that called?
I don't know. It's a ghetto
Leftover
champagne.
Prosecco and ginger ale.
Well, the
How about you,
Prosecco's now
Patrick?
flat now. That's why I need a ginger ale.
I'm going back to a brewer that sponsored us originally, Flying Monkey. We've had a couple of their beers, many past. So I was at the liquor store. I bought it. This is the Psycho Thrill Seekers Double IPA. It's an 8% strong beer. I'm dying to try this out. What are you drinking? I want to open this.
Well, Patrick, we got to stop you from drinking all the hard beers because you get like a few into it and it gets ugly. I went and I was looking through my fridge and I'm left with all those like hard ale, the hard liquor ones, like not liquor, but like hard alcohol content.
Right.
And I hate those. You know me. If I can taste the liquor, I don't like it. Or the alcohol, I don't like it. So I went back to New Glarus Brewing. That's the Winnipeg buddy of yours. He brought the Spotted Cow.
Oh, right. That's
and I'll
actually
tell
a really
you,
good beer.
This beer's from Wisconsin, but it tastes just like it might as well be like Canadian.
It could have been.
It really does. It's really good, actually.
Yeah. All right, let's try these.
Okay, while you're drinking that, I'm going to do my legal stuff. Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in this show. Side effects of too much huddle may include tomb eye touts, stung tongue topping anxiety, and or sedated vampirism bullishness.
Ooh.
Those sound like some random words just put together.
Exactly. You got it, Lena.
This beer is actually delicious for an 8%. Like I thought it was going to be really heavy, and it's a very hoppy though. That's for sure.
I'm hungover just hearing.
We're gonna keep you to the limited to 2, Patrick. You're gonna have a hard.
I'm
stop.
actually probably not even gonna finish this one. We'll see how this goes.
We're gonna give a hard stop.
All right.
Okay,
So
let's get to
go
it. Now for my favorite segment, Talking Charts with Patrick. What do you got for us this week?
Hey, listen. Let's just talk charts. S&P still hasn't given out. Obviously, there was this hope that I don't know. Like, do you really buy into the little hype that caused that pop? That the fact that Gilead Sciences there had something that was working out.
Well, so for those who don't know, last night we're taping this on Friday night, and Thursday night there was an announcement that one of the drugs that Gilead had kind of been experimenting with was showing great promise in terms of treating the COVID-19. So we had a huge pop. It was unbelievable in terms of, I think the NASDAQ went up, 400 basis points? It just ripped. And then what was interesting, Patrick, I think, is that initially it was the NASDAQ that led the way. And overnight, that was what was strong. But then out of the gate today, once the market opened, the NASDAQ sold off. It was actually down on the day at one point. It did finish up, but it was down on the day, and it was actually the S&P that was bid. It finished up 300 basis points. Yeah. Now, I'm looking at this chart, and you know me, I'm like a complete neophyte, don't know this dark art of this dark magic that you practice. But that looks to me like a flying dodgy top or whatever. There's something, I know that's significant for some reason.
But it needs a reversal candle on the other side. I mean, you can't just call it while it's happening. You need the reversal candle. So
you need to wait for
they need to go lower.
You need to wait for it to actually go the other way so you could say, look, that was a top in hindsight.
Yes, hindsight is the best for technical analysis. What I wanted to jump just temporarily to crude oil. I mean, everyone's sick of hearing it, but look, when you go to someone like FinViz, where they're rolling the futures contracts, crude oil looks like it had this monstrous 27% gap. Up to $25. And that makes the average person believe that there was some big up day in crude, and it just was not. I mean, this is just a super contango in full play. And people need
crude was actually down on the day.
It was. And so let's actually quickly just look at the May versus June contract so that people can actually see this. Like the actual May contract, which is going to be expiring soon, they're rolling. I mean, we saw crude oil trade. Its low was that 1731.
Yeah, it was pretty ugly.
Pretty ugly. No. I mean, that's fresh lows on that contract. But then you go and you go to the June, right? You're trading at 25 and a quarter. So all these charting services, all they did was roll forward. They're just tracking the next on the continuous contract, the next higher. And so this gives the perception it's like a big update in crude. It was nothing. Crude oil was actually down.
Right, and that's what you need to be careful about when you're looking at those those rolling issues, because they can mess it up. And this is we've talked about this.
Do you know if the USO actually does multiple expirations out, or whether they're just rolling front month?
No, they do one, or at least it's my belief that they do one, and they take 4 days to do it, and they were complete as of, I want to say the day before yesterday. But
so the roll is already priced in, right?
They're already into the
so look at that. The USO is. I mean, listen. You were gonna go ranting on this, but like it's down to $4. They've already rolled to the June, and the June was like $5-6. They lost everything on the roll.
Yeah, well, that thing is gonna continue to bleed as long as the curve is this steep.
Yeah, absolutely. Yeah. It's like being a long volatility over 2018 and 19, right?
Right, because the curve's so steep.
Yeah. And so, anyway, crude oil, it wasn't a big update. It was actually down. So what's interesting is, what do you make of the divergence in the gasoline futures chart? Like, I mean, gasoline is not sold with oil at all. It's held up. I mean, those crack spreads continue to widen.
Yeah, well, I love it, Patrick. It's one of my big calls. I love gasoline. I still think that this summer is going to be a record driving season. I know that's crazy, but I think that...
You're crazy.
Crazy. And the crack spreads are going to continue to widen. It's good for the refiners. I like it. You know, look at Valero. Valero was on fire.
I'm not going to say, actually, I'm not going to gooch it online, so I'm going to say, okay, good luck for you. I'm not going to say anything. Because if I say I love it, then everyone knows that they got to fade it. So what's interesting is, is this a bottoming formation on nat gas? What's your take? Like this,
Patrick, you're asking me all these things. You're setting them up. You're teeing them up for me. Of course, it's a bottoming formation of nat gas. Nat gas is headed higher. No, I'm bullish on nat gas. I still think that.
But are you doing it through the companies, or are you actually laddered out the?
No. So our buddy Cuppy is rolling in delight as his companies go ripping higher, and I'm just along all the futures. And we were kind of laughing about that, him and I today. I still like the
he's
futures.
still in Sandridge, right? Like
No, he has some other names. Is it RRC? Dial that. I think that's what he likes.
The Range Resources.
Yeah.
Oh yeah, that's a nice one.
Yeah. I think that's the one he's playing. And it's just
Well,
ripping
you know,
iron.
he hasn't come on the show to bullet yet. We'll see what the Cuppy effect is once and we're talking about it now, so we'll see.
I think these are pretty big things, though. The Cuppy
Yeah,
effect,
yeah.
And not only that, I think he's talking about it with some other pals. It's not like I have some information that no one knows.
But so anyway, the Sandridge, it does also look like a little bit of a bottoming formation rolling. Like it'll be interesting to see whether or not these nat gas stocks, like I mean, they've already been bled out. These are synthetic call options at this moment when you're buying them at $1, right? Like it's what is the credit on these things trading at? Like all these kind of energy companies.
Oh, I
Like
think they
70
all
cents
had
on the
trouble,
dollar.
right? Like in terms of the
Yeah,
you're
they're
talking
70
about the
cents on the
corporate
dollar.
credit, right?
Yeah,
So,
yeah.
like if we go look at Sandridge, what's the symbol there? I'm just going to dial it.
SD.
SD. I'm going to just see how much debt they have because it'll be interesting to see. If you go look at it right now, they have like the market cap is 43 million. This isn't even a real company, Patrick.
It used to actually be a real company, and back in the day when it was like a $30, $40 stock, like when it gets killed to $1, they've just killed it, right?
Yeah. So this is $43 million, but it has 300, ish million dollars of debt or something, or 250 or something. So that's not really that's not the way to play it. But let's even look at what it's RRC. Is that his one that he likes?
Yeah.
So let's go look at that. That thing has a market cap of $1.2 billion. Okay, so it's a real company. And now let's go look and see how much debt they have. And they have $3.2 billion of debt. And let's go just pick a part of this issue and see where it's trading at and go see. So the yield to maturity on this bad boy of a 2026, so what, a 6-year bond? And this thing is trading at, where are we here in terms of yields? Let me just give it a second here. 15% is down from the 25 and the 30 ticks that we saw in the height of the March kind of sell-off. So even
now that the Fed is loading up on RRC,
I don't think the Fed's buying that, but speaking of junk bonds, let's go to the junk bonds. I know you want to talk about it.
Let's go back to our good friend Rob's Koifen site here, and it's interesting. Like we had credit spreads blowout on the high yield bonds to over 800 basis points. I mean that pretty much surpassed the 2016 crisis, surpassed the 2011. I mean, you pretty much our only time was 2008 where we had credit spreads blow out, and I bet you they would have gone there if it wasn't for the Fed buying, right?
Oh, for sure, Patrick. If the Fed hadn't stepped in there, we were going a lot lower. Yeah, it was going a lot lower.
Yeah, and you were long.
But now
they've
come out. They surprised everyone since we chatted last. They came out and the Fed announced that they were going to go out the risk curve and actually buy fallen angels like previous triple Bs that are now high yield, and then even buy high yield ETFs, which is a huge departure of where they had been previously, right? And so what we saw was if you pull up the HYG kind of ETF, you'll see that there was a monster gap higher. I was talking to a buddy that was on a trading.
Well, when
desk,
you know the Fed you're going to be able to sell it to the Fed, it's an easy buy.
Well, I don't even know if the Fed's going to buy any because the reality is that the clients were all underweight and they bought it all. He told me, this fellow on this trading desk told me that morning, I guess it was after Easter, right? Like, did it happen over the Easter weekend? He said that morning we got up and clients came and just cleaned out every offering they had. But what's interesting, Patrick, is that look at the action. Can you go and give me like a 15-minute kind of chart?
Here's that 1
that?
hour here.
Yeah. Like, it's not like the most bullish thing since then, right? Like, it's kind of trending lower. Would you not say?
It did go from 76 up to 84 in one shot.
Right.
Like, and so like it's going to take a pause. I mean, you go backfilling moves after such a huge gap, right? Like, there's nothing bearish on this chart other than it's shit bonds. I mean, that's bearish in itself. But
Patrick, technicians don't judge the quality, the fundamental quality of the bonds. They just
come
look at
on.
the price
Ford
action.
made the cut now. I mean, Ford's in the basket now.
I don't know. To me, it just doesn't feel right. I don't know why. It just doesn't feel right, and maybe it goes higher. But
the capitalism.
like if you said to me, buy or sell that thing, I would definitely sell it. And I don't really have a good excuse for it. It's not like there's no fundamental reason.
But you know what, though?
Listen, it doesn't feel right.
To me, I've been basically telling my members that I'm just not trading it at all. The fact is that what we don't have natural price discovery anymore. And it's like, so how, you think that while the Fed is willing to buy some, that this thing could go back to its lows? I doubt it.
No, it's not going low. It's not. Listen,
like,
okay,
yeah, well, you're gonna clip
months.
it for $3 to 78. Well, good luck. All right, great gap fill. Good.
Yeah, you're probably right. It's probably a nothing burger, as you like to call it.
It's just gonna be dead. It's until the Fed lets the market do what the market does. Like, look at 10-year yield still hanging down there. This deflationary impulse ain't going away, buddy.
Listen,
crude oil's holding down. I personally, I'm going to make the call. I think we go down to like 25 basis points on this thing.
Whoa.
Yeah, I do.
Holy shit.
But for the first time, I am no longer willing to be a bond bull. I'm willing
wait, you just told me it's going to 25 basis points.
Yes, that is a trade, and that trade could be done in a month. But the thing is that I honestly think that what's happening here is that this is the last kind of once this move kind of finishes, that's it. I might come onto your side and become a bond
Oh my
bear.
God! Don't do that, Patrick.
Yeah. Well, what do you mean?
It's
been working for you all along. Then now I'm going to ruin it for you. Like,
it's true, but we know.
Me coming over to your dark side might actually.
Yeah, but we both know that when we're on the same side, it never works. It's just like it's
all right.
It's
so then you turn
rain.
bullish. Let me go bearish, so then I can be right.
Screw you, bud.
All right. Anyway, so other than that, what I just one last thing I want to touch on. It's interesting how weak some of the global developed markets were outside of the U.S., right? Like, you take the Euro stock. This bounce has been, first of all, the sell-off was massive, and you would think that the reflexive rally would have looked more NASDAQ-like. And what's interesting is that when you look at the Euro stock and you, let's say, compare it to something like the small-cap Russell, they look the same. Like,
for sure. Almost everything except, Patrick, you do Canada,
except for
it's
the
same
NASDAQ.
deal. Well, everything except like NASDAQ and even the S&P to some extent. It's kind of the
South
S&P's
Korean
a little
Kospi,
bit.
though, has actually looked a little more NASDAQ-like.
Oh, there you go.
I mean, that's maybe all the semiconductor kind of shit that's in there. But, you're getting...
Yeah, you're right. Like Samsung's such a big portion of that, too.
Yeah, anyway, I just think it's really interesting that everyone is all hyped about these U.S. large caps, but a lot of the real global economy ain't recovering anytime soon. So anyway, we'll talk more about it as we go, but that's what we want to cover in the talking chart. So let's move on.
What do we got
time
for this week in trading history, Patrick?
This week in trading history. Let me grab my notes. I can't even figure out where I freaking put this shit. All right, here we go. Okay, so what I wanted to do is go back to April 18th of 1906 when the big San Francisco earthquake happened. And of course, the natural disaster like that is not a trading history, but I want to talk about the actual trading of what happened to the markets. And obviously, one of the great and very famous bear markets happened in 2007, the year later. Right. And though a lot of people kind of viewed that this was sort of the...
You mean 1907. I was confused there.
Did I say...
Yeah, you said 2007. I was sitting there trying to calculate what's he talking about, and I'm like,
no,
1907.
Sorry.
Yeah, fair enough. No worries.
My apologies. So anyway, what was interesting was a lot of people viewed the San Francisco earthquake as sort of the kind of coronavirus. What the coronavirus is to us in this bear market. That was sort of the catalyst for the U.S. bear market back then. And so one of the great famous traders that traded it unsuccessfully, because is Jesse Livermore. And
your favorite guy.
Yeah, but
like if you could bring one person back from the dead, Patrick, it would for sure be Jesse Livermore, I think, for you.
Maybe, but there's so many great stories to share about this, right? And so what I thought was really interesting is let's actually kind of think. It's great when I'm going to take an excerpt out of the book. So let's read this. It goes, I studied the situation in 1906, and I thought the money outlook was particularly serious. Much actual wealth of the world had been destroyed. The earthquake and the fire in San Francisco and other disasters touched everybody: manufacturers, farmers, merchants, laborers, millionaires. The railroads must suffer greatly. I figured that nothing could stave off one peach of a smash. Such being the case, there was just one thing to do, and that was to sell stocks. And now, when I decided, I went in with a full plunge. So he goes on and says, since we undoubtedly were entering upon a genuine bear market, I was sure I could make the biggest killing of my career. He goes, the market went off, then it came back, it shaded off, and then began to advance steadily. My paper profits vanished and my paper losses grew. One day it looked as if not a bear would be left to tell the tale of this strictly genuine bear market. I couldn't stand the gaff. I covered, and it was just as well. If I hadn't, I wouldn't have been left with enough to even buy a postcard. So he goes, I lost most of my fur, but it was better to live to fight another day. He goes, I
like that line. I lost most of my fur. It makes me laugh.
So he goes, I had made a mistake, but where? He is asking, like, where? He goes, I was bearish in a bear market. That was wise. I had sold stocks short. That was proper. I had sold them too soon. That was costly. My position was right, but my play was wrong. However, every day brought the market nearer to the inevitable smash. So I waited, and when the rally began to falter and pause, I let them have as much stock as my sadly diminished margins permitted. I was right this time for exactly one whole day. For on the next, there was another rally, another big bite out of yours truly. So he goes, so I read the tape and covered and waited. And in due course, I sold again. And again, it went down promisingly. And then there was a rude rally. He goes, I looked as if the market was doing its best to make me go back to my old simple ways of bucket shop trading. It was the first time I had worked with a definite forward-looking plan, embracing the entire market instead of just one or two stocks. I figured I must win if I just held out. I decided that I began too soon, but that I really couldn't help it. Then the market began to sell off. That was my opportunity. I sold all I could, and then the stocks rallied again to quite a high level and cleaned me out. There I was, right and busted. I tell you, it was remarkable. What happened was this. I looked ahead, and I saw a big pile of dollars. Out of it stuck a sign said, "Help yourself," on it in huge letters. Beside it stood a cart with the Lawrence Livingston Trucking Corporation painted on the side. I had a brand new shovel in my hand. There was not a soul in sight. I had no competition in the gold shoveling, which is one beauty of seeing the dollar heaps ahead of others. The people who might have seen it had not stopped to look. Instead, they were looking at baseball games instead and motoring or buying houses and paid by their very dollars that I saw. That was the first time that I had seen big money ahead, and I naturally started toward it on the run. Before I could reach the dollar pile, my wind went back on me, and I fell to the ground. The pile of dollars was still there, but I had lost my shovel, and the wagon was gone. But so much is the spirit too soon. I was eager to prove myself that I had real dollars and not a mirage. And I knew that what I saw, thinking about rewarding my excellent sight kept me from considering the distance of the dollar heap. I should have walked and not sprinted.
Some wise stuff there, Patrick.
Right. And so, but what I thought was very relevant was the fact that, when bear markets begin, a lot of the really smart people say, shit, look at all the damage of everything that is being done around it. And it always shocks how many bear market rallies there are and how many times they try to take it back up. And if you're too eager to capture the bear market, those bear market rallies can just wreck you. It's a very dangerous game, shorting, because it's well, at least if you're doing it in heavy margin.
Well, I feel like, Patrick, that it's the same way on the bull side if you're trading with leverage. And the moment I think I start to know something, and what I like best about his comments were when he said, I saw the pile of money. Whenever I'm sure of something, I know that that's when I'm the most dangerous point of my trading, when I'm most likely to make a mistake and go too big, which is in essence what he did. He traded too big, and that was the problem.
He traded too big, and he was in there early. And, like if you look at that chart on the screen there, you can see that the real bear market started even a year away from the initial plunges. And the thing is that there was really big money to be made, but you had to wait for it. And one of the hardest things, and especially nowadays when we're trading options and you're looking at these 1 and 2 month expiries, often what happens is that you don't buy enough time and you don't position yourself properly. And the really big move is still coming, but it's always amazing how long it takes.
Yeah. Well, Patrick, some people even trade the weeklies.
Really?
Yeah.
Never. Anyway, so let's go on.
Thanks for sharing that, Patrick.
No problem. So let's get to the WTF clip of the week, buddy. What do you have in store for us?
So Patrick, Charlie Munger from Berkshire was actually out with a note that he gave to the Wall Street Journal defending his position about whether Berkshire was rubbing their hands with glee at the falling stock prices. And when I saw him compare it to a captain in a boat, all I could think of was The Perfect Storm. So I did a little mashup there, and I kind of like this one, Patrick. I must admit, it's not the funniest one I've ever done, but I kind of like it.
All right, let's watch.
Some comments from Berkshire Hathaway's Charlie Munger to the Journal this morning.
In the fall of 1991, the Andrea Gale left Gloucester, Massachusetts, and headed for the fishing grounds of the North Atlantic.
On investing during the pandemic, he says, I would basically say we're like the captain of a ship. When the worst typhoon that's ever happened comes, we just want to get through the typhoon.
2 weeks later, an event took place that had never occurred in recorded history.
Mayday, mayday, mayday.
We're not playing, oh, goody, goody, everything's going to hell. Let's plunge 100% of the reserves back into buying businesses.
Oh, my God.
He also says on the economy, of course we're having a recession. The only question is how big it's going to be, how long it's going to last. I don't think we'll have a long-lasting Great Depression, but we may have a different kind of mess. All of this money printing may start bothering us.
These storms have collided. What the hell are you doing? You're headed right for the middle of the monster.
You nailed it, though. You know what? That really is what it feels like trading the markets nowadays, isn't it?
That's right. I actually had this whole section at the end when George Clooney and Mark Wahlberg were under the boat and they had a little bit of air and they were talking to each other and they had this big kind of speech where they were talking about, well, it was a good run and all this stuff. And I almost put it in there because I thought it might be a little fitting given that Charlie Munger also has a partner, and maybe some people have speculated that what if Berkshire is actually in trouble? What if Berkshire is actually on the hook for a huge amount of insurance, and that this is going to be their kind of moment where they all blow up? I don't think that's the case, but I've seen that speculated, and I thought it might have been a funny part of the video, but it ended up being a little too long.
All right, let's go on. All right, time for Tales from the Trading Desk. What do you got for us, Kev?
So I got a funny one, Patrick. Way back in the day, I was actually one of the first in Canada. Actually, I think I was the first in Canada to create what is known as an automated arbitrage between the New York Stock Exchange and the Toronto Stock Exchange. So I made this program that would go watch for one stock to be mispriced, like let's take Research in Motion or BlackBerry, for it to be mispriced, and then my machine would buy it in the U.S. and then sell it in Canada, and, taking into account the currency, and then we would hedge out the currency.
I remember by the way, you're showing your age by the fact that
I'm talking about Research in Motion.
Yeah, but and the fact that this wasn't already done. This is just assumed nowadays with machines. And
so for sure.
You were the pioneer, buddy.
Well,
Did you have hair back then?
I did have hair back then. That's how long ago it was. And one of them, I remember my boss telling me, he says, what are you doing over there? And I said, well, I'm writing this program. We're going to do this. And he says, why are you doing that? I already have 13 guys doing it. And so the long and short of it is that those 13 guys had to find something else to do because the machine eventually would do all of it.
Yeah.
It was an amazing, profitable machine in the 90s because what had happened was the Americans and the high frequency people weren't in the game yet, and there was huge amounts of spreads. It was one of the greatest trades I ever did, and it went on for a few years. Now, the funny part of this trade, though, is that when we would go and we would execute our U.S. side, we used a firm called ITG. And those in the institutional world know ITG very well. They were generally kind of considered one of the most savvy of electronic shops. And back then, they had just started. They weren't quite as kind of ubiquitous as they are today, but they were still a big shop. And I remember our saleswoman coming and talking to us, and she said, guess what happened this week? And I think it was one of the long-term capital weeks, or it was one of the weeks when it was really busy for us in the arbitrage machines. And she says, in front of everybody, we had a meeting, and they asked who was the biggest clients this week. And they went through it, and they said everyone was guessing like Cap or Fidelity and all these different names. And the boss says, nope, it was RBC DS machine number 3. So we had gone to the point where we were trading so much that we were actually ITG's biggest client some weeks, which is kind of amazing because they were a lot of big clients. But the funny part of this story is that one day we got up and the machine seemed to be extra profitable. And we're always a little suspicious when it's extra profitable because
Something's
what's
wrong.
changed,
Yeah.
so we kind of go look at it and we're trying to figure it out. Everything looks good. We're testing everything. We're looking at the fills. Everything seems fine. And we're going through and I just say keep it running. Let's go. It's making all sorts of money. And so at the end of the day, we literally have one of our best days ever and it looks great. And we're going off to the bar to celebrate. And all of a sudden we get a call and it's from ITG. And they say, Kev, can we speak to you? And I say, sure. And they go, we have something kind of embarrassing to say. And I said, what? And they said, we had put you on the simulator and you've been trading all day with the simulator.
What?
Yep. So what was the problem was, though, that we were trading with the simulator in New York, but we were executing trades in Canada that were real trades. Wow. So, we did, I don't know, let's just say we bought $10 million of stock and we sold $10 million of stock. I don't know what the numbers were, but it was a fair bit of stock we traded. And so I was like, holy shit, do you understand what this means? This means that, we have the entire other side of all these trades is not good. And I said to the sales lady, I said, well, what do you want to do? What are we going to do? And she starts talking. And I go, well, listen, I don't know if it's a win or a loss, but, because it could be theoretically a win. It could be a loss. You just don't know because you don't know what I've traded, right? I said, realistically, it's you got to it's your mistake. I can't be expected to eat this and I can't be expected to know that you have me on the simulator. So you got to take it. So she agreed and we hadn't figured out the P&L at the time. So they just took all of our fills. They basically made good on all of our fills. Okay.
Right.
And so they spent the next 4 days unwinding this thing. And I think they ended up making money because they got lucky and stuff like that. But it was just a funny story that literally we traded all day buddy. And we were on the simulator. So be careful. You never know. You could be on the simulator. And you know what, Patrick, I actually have heard stories at people that have been on, when you go to a lot of these prop shops, they have simulators. And then every now and then they let people, they go the other way. They turn people off the simulator and they're trading for real. And you hear about some guy that made he was just swinging it around like a madman and he makes $500,000. And then he expects to be paid on it. And they're like, no, you were supposed to be trading on the simulator, but he had been trading in real life. So just be careful. And when someone offers you the red pill, make sure you take it.
Oh, thanks for sharing. All right, let's move on to reviewing the top 3 things from last week. Well, so we're going to do the next week as well, but let's start with last week's. And so the first thing we were going to talking about was Bank of Canada, and that was yours. So what ended up happening?
So the Bank of Canada did expand into corporate bonds, which is much needed because we're having all sorts of trouble in terms of in Canada with our credit markets. I still think it's not enough, and I still think we're having a lot of trouble. Patrick, we're behind the Americans in terms of expanding our programs, both on the fiscal side and also on the monetary side. And although this is a step in the right direction, it still just makes me worried, and I feel like we're playing catch up. And although they're doing a good job at trying to catch up, they're still not there. And so I'm disappointed, and I think that there's a lot more pain to come in Canada.
There you go. You heard it from Kevin first. I'm not going to say anything to the Gooch or nothing. All right, so number 2, gold breakout or fake out. So what was interesting about this one, let's just pull up the chart on gold, was that we obviously had a pretty strong breakout. But one of the things that I was generally watching was the fact that we are approaching a lot of the major highs of all-time highs in 2011 and 12. And while I actually remain a pretty good gold bull, I generally think that this isn't just going to go straight up from here. And with this little pullback like this, I still think it'll be a buy on dip. But what's your take?
So I think that the gold story is this difference between the futures and the gold spot price, which is by the looks of things is narrowed because we saw the gold actually breaking out and the gold futures coming back in. So first of all, that's a good sign that the market's getting more in line. Patrick, I think that the Fed is at the margin reducing and tapering a little bit their quantitative easing, which is going to weigh on it. Bigger picture, I'm with you. The trend is for central banks to do more. The trend is for the Federal Reserve to supply any dollars that are needed into the system. So I think that if you ask me a year from now, is gold going to be higher? For sure. Whether it goes down or not over the next week or month, I'm not as confident as you that there's going to be a dip. A little part of me worries that a good bull market basically never gives you a chance to get in.
Yeah, the only thing there is if it's a broader bear market, it's going to be hard during periods if there's another downdraft in the market for gold to be actively bid. I mean, maybe it's always possible, but there are a lot of risks when there become liquidity issues, right?
Right.
And so number 1, we were just talking about this 50% retracement on the stock market, and more or less we're still there. It's exceeded the 50% retracement just a little bit, but generally the 2,800 more or less has been around the 50% retracement zone. And so today's gap higher was definitely closing above there. But generally, the whole idea of a 50% retracement is after a crash, you have the reflexive rally the other way. And while the S&P and the NASDAQ have definitely beat them, markets like the Russell and the Euro stock and other things have not, right? And so it's, to me, I still feel that this is a bear market, and on balance, we're going to fade off of here is my positioning. And don't say anything if you agree.
No, I was going to say, Patrick, you'd be proud of me. I was looking at the Qs, and I was looking at the NASDAQ, and I was looking at the retracement, the fibs. I like calling it the fibs.
You were looking at fibs?
I was looking at the fibs, and I was looking at it. I was saying, where's the next fib? And it's 220-ish. Check if I did my math right.
On which on the NASDAQ?
The Qs. I did the Qs, but you could do NASDAQ. It'll be the same.
No, Qs are fine.
So I was thinking, because I thought to myself,
what did you do? Like a 78.6 up there?
Yeah, I think it's something like that.
1 second here. The 78.6. Yeah, that's just above 220, yeah.
Yeah, because that was, to me, when last night, it traded up really high, right? Like I think it was trading 219 or something. There were some ugly ticks, and I was trying to pick my level where I was going to be like giving them some more overnight. And
but this isn't a very broad rally. Like it really is an Amazon, Netflix.
For sure. Microsoft.
Rally, right?
It's Microsoft, Amazon. It's like those two are like powering.
Well, Microsoft isn't at new highs. Like Amazon is at an
but
all-time high.
Microsoft still. Listen, it's a good looking chart, Patrick. Like you wouldn't even know that there's like anything going on if you looked at that chart.
But look at
Amazon.
Like, I understand everyone's ordering everything online, and they're definitely benefiting from this. Like maybe this is truly one of those stories that could run independent of a bear market, right? Like. It's
I don't know. I think it's the stupidest thing in the world, Patrick. Because this implies, this implies that that this Amazon gain is going to be permanent.
Yeah,
and maybe it is because you're going to get more people going out of business. But I don't know. It just feels to me.
I mean, from lows to highs, it ran 50% in like a month. 50% in a fucking month.
It's like all the QE went into two stocks.
No shit, right?
Yeah. Okay, let's go. What do we got for next week?
So next week, it's the earnings, right? Like, like 20% of the S&P 500 are essentially.
You're good at the math, Patrick. 107. It's a little more than 20%, isn't it?
I was rounding. That's what I do. It's more.
So the real question, though, Patrick, is: does anyone care? Do you think the market cares?
Okay, I think the market cares, but I also think there's a pass in a sense that everyone knows these numbers are going to be shit, and so I think what will potentially not. That could be a bigger influence is if the companies come out and really emphasize how bad their businesses are being hurt for the longer term, like in a sense that how does this change their business model over the next 3 years?
But I think that even then a lot of companies are not issuing guidance and they're being kind of hesitant to go and explain what this means for their business.
This is what I believe will be the second leg of the bear market. Like the COVID-19 is not going to be the second leg of the bear market. The second leg of the bear market is going to be about all of the unintended dominoes that have started to fall from the COVID-19 crisis. And without companies giving guidance and things like that, this is where it could drag on for months before everyone realizes how foobarred everything is. And that
there we go, folks. The technical analyst telling us that fundamentals are going to drag us down. I like it. What do we got for number 2?
Hey, I all right. Anyway, I'm not going to get goaded into this. All right. So let's number 2, the flash PMIs in German. Is it ZOW or ZOO?
ZOO. I don't know how they say it. First of all, Patrick, what the hell? ZEW? Z, what the hell is that? Like, I know you cater mostly to American clients, but listen, it's Zed, buddy. It's Zed.
Z.
It's not Z. I love it when I go to the States and I say Zed and they are like, what the hell's a Zed? Like when you get people that have never heard it before and they're like, what is a Zed? And you're like, what do you mean? Zed, baby. Zed's dead. Okay, you won't know that reference either, Patrick. But
yes, I do.
Oh, wow. It's like because it was in the 90s, you actually went to movies back then.
Yeah, exactly.
So let's talk about this.
Pulp Fiction. I've watched that like 3 times. Anyway, whatever. Forget.
Yeah. German ZEWs. Basically is like I think it's their like PMI type thing, and I don't know, Patrick. Europe just continues to just astound me that they can't figure out how to go about getting together and spending some money. And until they do, these numbers are going to continue to stink. And if I wouldn't be surprised if these numbers were atrocious, and the market is probably not as ready for it, and the market is definitely not ready for them to continue to bicker and fight about it. And we need another European market crisis before we're actually going to get any solution.
Are you finally going to accept that the euro could go down to parity? Are you willing to go down?
Oh, I'm for sure. Listen, they blew it. This is it. This is to me like if they can't figure out how to get together and spend. I
can't believe how wrong you've been for years, and now you have an out.
I'm not saying it's going to do that. I'm just saying that I'm not as bullish as I have been because I've been disappointed in their behavior.
Well,
if they change tomorrow, I would change my tune.
Yeah. Well, you know what? Hopefully, when we get Cuppy on for Cuppy's Corner, he can say something more optimistic. But I might offer you guys that bid to get out of your.
I
steak
still
dinner.
can't believe. For those who don't know, Cuppy, we had done a one-touch bet, and it was what, 115, and it literally ticked at 114.95. And Cuppy went and
he
tempted the
it.
market gods, and he goochered it. Oh, and another thing. Many people have asked about the origin of the word goocher and have looked it up and haven't found it. And I went, and I just want to tell everyone a couple of things. First of all, you spell it goocher, Goocher. It is in the Urban Dictionary. I submitted something there because let me see if it made it. Because I was like, oh, why is nobody there? There are a lot in there that are not quite correct. And just when you're looking up Goocher, don't go and look at the ones about, you know what. So, and it does not look like, oh, wait, mine has been picked up yet. Oh, there it is. I am the last one. Number 15, Goocher from the classic movie Stand By Me. Okay, and basically Goocher is when you jinx something. You don't want to Goocher it.
Right.
There you go. So that
is the market Huddle terminology now, though.
That's right.
Well, we stole it from them, but we now own it.
That's right.
We've taken.
Okay. What do we got for number one, Patrick?
So number one, we just wanted to take a look at uranium, right? Like
uranium. Nice.
Well, you know what? What is interesting? I'm going to look at it. We have to look at a line chart because it's just it doesn't trade enough to look at it on candles. But let me just here. So when we look here at uranium, she be running.
Yeah.
Right. Like now, I mean, I'm going to put on a weekly chart because we haven't beat like a 5-year high. No, actually, wait. Oh, yeah, we had to go all the way back to 2016. So it's not a 5-year high yet. But this is, look at the velocity of that advance. It's
funny how it just comes out of nowhere, eh, Patrick?
It's for
real.
real.
You sit there, and you think, oh, God, what's wrong with it?
We had Mike Alkin on, and we had
nothing's really changed. I guess the Fed's printed trillions of dollars, but, that's...
It's because Cuppy sold those uranium to go into shipping. He
goochered.
He finally took his foot off the thing, and when he covers, like now they can let it go.
Yeah.
No, just kidding. Cuppy, we love you. But it's a move, and
it's a move.
And you know what? Like if you look at the much bigger picture, we've had basically a 5-year basing formation from 2016, 4 years. And it really and it has some real velocity on this turn. This could be for real.
For sure. Right. The mistake will be to give it away too early.
Yeah.
Hold out. Don't give it away.
Yeah.
Just like your parents told you.
It's a good position. Anyway, that's the top 3 things to watch next week. All right. Well, do you have some parting words of wisdom?
So I found one that Peter Brandt wrote, and I thought it was really great. And I'll read it to you guys. There is a big difference between being right in the markets and making money in the markets.
Nice.
And there's so many people that are great on Twitter and are great on this, and you actually go look at their how much money they take out of it, and it's difficult. There's 2 different skill sets. Like I remember reading about Jim Rogers, and my old man would say, listen to, look at his calls. Like his calls are all terrible and they all don't seem to like work. But then I'd like look at his P&L and I'd be like, somehow he manages to take a lot of money out of the market. So he's doing something right.
Yeah.
And so you have to be careful about really paying attention to those who are able to take money out versus those who just sound great, because it's 2 different skills.
Right. Oh, it's so true. Like there's a lot of people that just know how to tell a great story. In fact, I would argue that much of what people seek in the markets is a great story, right? They want to hear a reason for something, and the people that are very good storytellers do get a lot of attention.
Right.
And sometimes the people that just understand the game don't know actually how to communicate what they're seeing. They don't know how to make people understand it. But then they sit there and they just hit the machine and they just
Right. And the other thing about that, Patrick, is that I remember watching Stanley Druckenmiller when he first did an interview, and he was a terrible interview because he was uncommittable, to basically any position. He's like, maybe bonds go up, but if they don't, I'm going to sell them. And the reality is that too often that's how you make money in the market, is by not having a view and not committing to yourself and listening to the market. So the best traders, unfortunately, sometimes are those who are the most flexible. And that's kind of maybe that's the real message of it, is that those who just say it's got to go up, they put their foot on, they slam their foot on their fist on the table and they say it's got to go up, it's got to go up, it's got to go up. Maybe they'll be right. But over the long run, that's not the person that's going to actually make you money consistently. It's those that show the flexibility to change as market conditions and as the game changes.
Absolutely.
Okay.
I agree. You know what? Now, this is where we normally do an exit, but, I feel like we should get Lena on here because when she tells people to hit the like button, we always
better.
get it does so much better.
Yeah.
So,
you know what? She should be in charge of the outro from now on.
Because people listen to, they have respect for her, right? Like,
I know.
We've
long
they have no
lost
respect for us. They've heard our market calls this whole time,
Yeah,
and it's like, no,
that's right.
you know what? It must be bad advice. They're both telling me to hit the like button. I have to do the opposite, right? Right, Lena?
You're just trying to pawn off more work to me.
That's right.
Oh, there you go.
Okay, Lena, remind viewers what you'd like them to do.
If they enjoyed this episode, I would like them to subscribe to our YouTube channel and maybe even get a notification by clicking on the bell button on the YouTube channel there, and or give us a review on iTunes.
Wow.
Nice.
I don't even know how to do that. I should probably learn how to do that. Am I subscribed?
I don't know. Are you?
I should go.
But we're also on Android Play, Podbean, Spotify. Make sure you subscribe to the YouTube channel and click like on YouTube. Comment underneath. Lena is the one that responds to everyone down there, so make sure you to type it on that and just give us some feedback. And otherwise, they could follow us on Twitter, right? They follow us on at the Market Huddle. Follow Kevin at Kevin Muir, myself at Patrick Ceresna. We like to tweet out every once in a while something, right, Kev? Do you have anything good to say on Twitter anymore?
I do have some good things to say. I think that they're funny. And by the way, Lena.
Yeah.
I am not a subscriber. So, boom, clicked. I am now
You
subscribed.
guys are not even subscribers?
I know,
Oh,
that's
my.
embarrassing. It's like, see, this is why we get you to do it. I didn't know that.
I
didn't
should
know
say
I
it
was
in a
supposed to
sultry voice
subscribe.
next time.
That's right. Okay, well, anyways.
Thank you, everyone, for joining us.
That's right. Big thanks to Barry for being on the show. Big thanks to Lena for doing up all the editing and putting up with us. I'm Kevin Muir.
And I'm Patrick Ceresna. Have a great weekend, everyone.
Take care. So we have to talk about the picture.
Yes, we do.
Yeah.
Yes, we do.
So
we do have to
first
talk
of all,
about the
before we do anything more, a big shout out to Count Truculent on Twitter, who was kind enough to make us The Other Guys picture. For those that are listening, there's a movie, The Other Guys, that I didn't realize, but I remember now, starring Will Ferrell and Mark Wahlberg. And this Count Truculent basically superimposed both Patrick and myself, our faces onto the movie still. I like it.
It's amazing seeing you with Mark Wahlberg
With hair. With hair. It's
Mark
just
Wahlberg hair.
odd.
For that.
It's a mane.
Yeah.
Yeah,
But you know what?
You're like a lion.
He had to go with that because, Patrick, you are kind of almost Will Ferrell-like.
I don't know if that's a compliment or if that's a jab. I don't know.
I should have
Keep
been
your
Vin
composure.
Diesel. I'm Vin Diesel. I'm not really Vin Diesel, though.
Vin Diesel.
Yeah, because he's the bald dude.
What are you talking about? Which bald dude?
Well, he's in The Other Guys, too.
Vin Diesel?
Yeah,
No,
isn't he?
Dwayne
Oh,
Johnson.
no. Rock Johnson. I'm sorry, I got it wrong.
Dwayne Johnson.
Do you know why?
AKA The
Because
Rock.
you know why I tried to get him out of my mind, because he's on my wife's list.
No.
Yeah.
I'm sorry, Vin Diesel?
No, not Vin Diesel. Rock Johnson.
Oh, okay. I was going to say, I'm like, Vin Diesel? That's not
Yeah.
a great trip.
So
But
you know what?
Dwayne
I
Johnson.
actually-
Everybody loves Dwayne Johnson.
Yeah, for sure. Although I have something to tell you about it, but I just want to say this one thing, that if you actually wanted to play me, if someone was going to play me on a TV show, it would probably be Paul Giamatti. That's basically kind of what I look like.
Oh. I don't know if you look like him, but...
But he's got the hair and the you know, he's about the right age. That's kind of the guy.
I would have said maybe younger Stanley Tucci.
Oh, that's very kind of you. Stanley Tucci is not is better looking than Paul Giamatti. Giamatti's
for
probably
sure.
more my so. Okay, so back to Vin Diesel, or not Vin Diesel, The Rock.
Dwayne Johnson.
I know. I better not say how I know this, but let's just say I have somebody in my family is in the movie business,
Okay.
and you know, there's some people in this world that you just know they're assholes.
Yeah.
Like Vin Diesel, everyone knows he's an asshole. Like, I think it's legendary. And then there are some that
He's
do a
fast and
terrific
furious.
job at like putting up a kind of a charade that they're like that they're really nice guys,
Yeah.
but they're just complete dogs.
Yeah.
Right.
That's The Rock.
Oh.
Yeah,
That's surprising because everybody thinks he's an angel.
exactly. He's got everyone
He's doing a good
fooled.
job as he's acting, you know. He's
But
doing
you
a
know
great
what? This is
job.
how much
He's
my
an
wife liked him.
actor.
She's like, I don't care. She heard it. She's like, I don't care.
He's on my
He
list.
is.
He's
It's not
he's
about his
coming off my list.
personality.
He's not coming on my list. He is
Not
like he's charming as hell. Like you watch.
Oh,
the
he's
guy in real life,
hilarious. He's just so lovable.
He's charming
right?
as hell.
He's funny.
Yeah, he's funny. He's a good guy. He literally seems like somebody like you want to babysit your kids. Just don't let him near your like 19-year-old daughter. That's all. Okay, I shouldn't have said that.
Speaking of 19-year-olds, Patrick's going to be 19 again for the
Yeah.
whatever amount of time.
That's you know what? It's good because like I was listening to you talking about celebrating your birthday, so it's like I got jealous. So I figured I might as well have a birthday too.
We're going to have somebody jump out of a cake somewhere.
Yeah, I'm gonna have like an ice cream cake delivered to me or something like that. We'll see what kind of condition it comes in. It comes in like one big soup.
It'll be milkshake by the time it gets there.
Okay, I have a question for both of you. When do you think we go back to work?
Oh my god.
What do you mean? I am working.
Yeah. No, but when do we go
We've
back to the
never stopped
office?
working.
I think probably not until after the summer.
Really? That
Yeah.
long?
Yeah, I'm with Lena. I'm thinking the day after Labor Day.
Maybe something
Really?
like that. Yeah. I don't think anything's going to resume, especially
I-
now that school's out until whenever, right? Like the rest of the school year is over. Nobody's
it
going
already
back to school.
officially?
No, as in like
You would think
they're
I
not,
would know that with kids.
They're not going back to school, right? Anytime soon. So
You should all
probably
online, right?
exactly. So then for the summer, what like they're
How exciting is that for parents? Parents get to have their children
24/7?
24/7 for like another 4 months. It's like September cannot come fast enough, right? Like,
People are running out of activities to do in the house. You know, I don't know. I don't know how. Like, especially parents with smaller kids, like toddlers or younger kids. You gotta
Oh,
keep
yeah.
them busy. They have so much energy.
it was so
Yeah.
much easier when you could just dump them on the other people and then pretend like they're okay. Like, doesn't matter what's going on. I got another 3 more hours before I have to pick them up.
Yeah, that's right. But you guys as kids are all grown up, so you guys don't have to worry about that.
Oh no, kids don't get easier. They just get more expensive.
They just get expensive, but they'll leave you alone, right? They want to be left
Yeah,
alone.
it's true. Yeah, it's true. Yeah, but young kids want to be left alone too. You just don't trust them. Right?
Yeah.
Am I wrong?
I guess. Yeah, I guess. When can you leave your kids at home by themselves?
Like
I
11
think
or 12.
Yeah,
Like
technically,
legally, I mean.
you can't leave them in charge of anyone else, but I think you can leave them alone at that age,
At 11?
like on their own.
Yeah,
11.
something
I think
like
it's
that. I
something
don't know
like
what the exact age. I don't want to hold it on me, but like I know it's like less than 14 for sure.
Oh, okay.
For sure. And
Interesting.
then I think it's 14 to babysit other kids.
Yeah.
So
Yeah,
to be
that
put
I-
in charge
that I
of
think
someone
it's like-
else.
yeah, you have
But,
to
like
be a teenager
theoretically, you
to-
can be 11 or 12. I think it's 12, Patrick. Now that I think about it, I think it's 12, and you can like basically be a latchkey kid.
Yeah.
Oh, wow.
You can come home on your own, and
Oh, shit. My
'Cause, you
parents used to leave me alone like when I was like 8.
well,
That was back
Thanks,
in the
Mom.
day. That was back in the day.
so my parents, my mom didn't work, so she was generally home, but we grew up at the cottage, and it was, I grew up in Winnipeg, and we went on Lake of the Woods, which is very remote Northern Ontario kind of place. And my dad is a little bit on the loose side when it comes to rules about,
Parenting.
you know, those things. So
Oh, is he the fun dad? Like Tiger Mom and fun dad sort of situation?
he was definitely just kind of as long as we weren't going to kill ourselves, it was good. So like he was very strict. Like we weren't allowed guns. Like so some people had guns. We weren't allowed guns. But for example, we all had boats, and like from the moment we were like 10. He put boats on these, like they give us a boat with an outdoor motor. And then the funniest part about this is that there were not a lot of cops on this lake, and it was very remote. And so he would go buy these engines that were used, and then he would stick them on the boat, like the little runabout. But he wouldn't check or bother to make sure that the horsepower was the correct kind of
Yeah, sounds
limit.
super safe.
So he'd have some boat that would be literally, it'd be like 15 horsepower, and he'd stick a 25 on it. And the thing would just rock. Like you'd be scared shitless. You'd have to just go straight because you couldn't turn the thing because it was just
Oh
like
my
so
God.
overpowered.
You get
And
thrown off.
the funniest part about this is that he thought that we should have a life preserver on because we were going all over the lake where nobody was, and it was kind of a hassle to put on life preservers. So we agreed that we were going to use those life belts. You guys know those life belts?
The life
Yeah.
belts.
Yeah, like they're like this tiny little belt.
Oh my
That floating
gosh.
thing.
How
Yeah.
old are you when you're doing this?
Oh, 11, 12. Like,
Wow.
shit, we were sleeping on islands. I remember taking the boat, sleeping on islands at, like, 13 or whatever. Like,
Yeah, you turned
then
out
you'll like
okay.
this. There was abandoned mines near our cottage. And so we used to go and, like, go to all the buildings and stuff and then look down the hole. Like, just crazy, stupid shit that you're just like, what the hell? Like, what were you guys thinking letting us do this? But it was, like, awesome. Like,
Yeah,
it was
kids
just the
nowadays
greatest thing
don't
ever.
Oh yeah,
know.
you would never let kids do it nowadays.
No. But it was awesome. But we flipped boats, we sank engines, like we did all sorts of stuff. How we didn't kill ourselves is beyond me.
Yeah, and you turned out all right.
Yeah. I'll tell you the one funniest story though was when so we're at the cottage and we have this across the way there's the landing because there's no you have to go by boat to get to the cottage, and so you can see the landing. And so oftentimes what he would do was we would watch for people. We'd tell them to park in a specific spot, and then we'd go look with the binoculars. And then one time we were waiting for these guests, and my dad, we were sitting there, and he gave me a beer. And I was like 12 years old or whatever, and I literally everyone was there, and it was kind of funny. He gave us just gave me a beer. It probably weighed 90 pounds or something. It was my first beer. And then he sent me across the way to go pick up our guests.
Oh my
And
God, on the boat?
And the big joke was that they all watched it, and it was like this weaving, like they watched me, and I couldn't keep it straight the whole way.
Oh my gosh.
Yeah.
Yeah, that
what-
sounds really
that's-
safe.
That's why growing up in Northern Ontario is like,
Hey now. I took a city bus to go see my grandmother, like downtown in Korea when I was 8 by myself. No cell phones, no maps, no GPS, nothing. I got off at the wrong stop, and I don't know how, somehow found my way to my grandmother's house.
nice.
So-
8. That's
Yeah,
good.
at 8 years old, taking a city bus, right? Like a downtown city bus.
Well, and not only that, I'm assuming you were in Seoul, and that's a pretty big city.
Yeah, exactly. So it's,
That's not like a little. How many people live there? It's got to
I
be
don't
bigger
even
than
know.
Toronto.
Yeah, it's definitely bigger than Toronto, for sure. But even like I went back 10 years ago, and I was scared to get on any public transit because I didn't know how things worked. I was like, and people looked at me like I was, they're just like, do you live under a rock? Because I could speak the language no problem. So people were just like, I don't understand you. Like, are you dumb? Do you not know how to ride a bus? It's like, I don't
That's
know
what
how
I
to
was
pay.
thinking, but I wasn't going to
Do
say
you not
it.
know how to work this bus?
Well, because everything was like 10 years ago, they had like one card to pay for. You can pay for your groceries, you can pay for your public transit, like kind of like a tap system we have here. But it's not your debit card; it's a different card that's like a universal card for anything you can pay for it with. And you just load the card like a gift card, but you can use it for public transportation and groceries. But I didn't know that, so I'm trying to take a subway there, and I'm just like, how does this work? Like, where do I pay? How much is the bus fare? People looked
like
at me
any
like
new
I was
place,
strange,
right? I had
right?
to figure out when I went to like London, England, how their card system worked on the transit and shit. Like, there's always a learning curve. when you
Yeah,
go
but they
somewhere
know
new, right?
you're a foreigner. Like, you're there as a tourist. Like, when I was in Korea, people are just like, "Didn't you like? I don't understand. How come you don't know this? You live under
Well, because
a rock?"
they think you're like
like
native.
that I live there. Yeah,
Patrick
I'm
goes
like a local.
to Korea. They're giving him a break, helping him out.
Yeah.
You, unfortunately, they're like, why the hell don't you know this lady?
They-
There's 10 million
they-
people. There's 10 million people in Seoul, by the way.
Yeah,
So it's bigger than Toronto by far, like double
by
Toronto.
far. But it's in a country that's small enough that it'll just fall into Lake Ontario. That's how
Really?
small
Fall
it is,
into
that
it.
country.
Is it that small? Like, is it
Yeah.
like is the Korea?
That's what my
like, I
dad
didn't
told me.
realize it's
anyways,
that
I don't know.
small.
It's a small country. It's already a small country that's divided in half. So, it's a tiny country.
What I think is crazy is that it's right on the border of the north.
Yeah.
Like it's so close. Like everyone lives so close to the northern border. Like it's like what the hell?
I
you
know
guys-
people that still have family in North Korea.
You
Isn't that
do?
crazy? Yeah. I know people that's like have their relatives still in North Korea. They have no idea. They have not had any, sort of correspondence with them since the war.
Oh my
They don't
God!
know.
Really?
They have no idea what their status is or if they're alive or whatever. Like it's kind of crazy. Pretty sure
That's
it's like
terrible. That's really
the
sad.
only country that's still divided in half, unless you want to count like the whole Israel-Palestine sort of situation.
Yeah.
Let's not talk about that.
Yeah, we're not going to talk about that. But.
The
Let's
but
not talk about
it's really sad. I didn't know that, Lena. That's
Yeah.
really sad that you have relatives. that
Luckily,
have-
I don't have any family in North Korea, but like every time it's like, oh, you're Korean. What are you North Korean or South Korean? It's like, do you not understand that if I was North Korean, I couldn't be here?
That's right.
Like I couldn't be here.
So you know what? All these people as well. Patrick and I know about Korea. We've learned everything about Korea from MASH.
Okay.
Right?
What's
That's
MASH?
basically-
No, just kidding.
Oh, come on.
No,
you
just
know MASH.
stop. I know. I was just trying to get you guys
Oh my
started
God,
with the
on
fact that I know
MASH.
nothing.
Is it a nice city, Seoul? Like I've never is it like? Would you recommend going?
It's a
visiting?
fast city.
Yeah?
Like, yeah. So when I went back when I was like 15 or something, and my uncle gave me like an MP3 player. I came back to Canada after the summer break of visiting Korea. I came back here with like 15 songs I had on this MP3 player because at the time you couldn't even get songs on like as an MP3.
Yeah.
So I had like 10 or 15 songs on this, like looked like an old, like the first generation iPod, like
Yeah.
this big block kind of situation.
Right.
And I went to school with it, and everybody was like, "Oh, what's this? What's this?" And like nobody could understand what I couldn't even really explain what it was. And we had just started getting like Discman and stuff,
Wow. Like you were so
Yeah.
far ahead.
Yeah, it's just they change things so fast there. It's like my mom would go visit every few years. She would go, like, let's say if she went this year and she went back the next year, she still couldn't recognize some of the buildings. Everything would be different.
Wow.
Like, things just change so fast there. There's no patience. And like people come here, like my cousins or my relatives that would come to Toronto to visit, they're like, you guys are waiting for everything all the time.
Well, that's mostly
get a
our
coffee,
subway
you have to
infrastructure.
wait.
While
Yeah,
we're
you have
talking
to-
about this Korea, can you explain K-pop to me?
You know what? That's a phenomenon I'm not familiar with either. But for some reason it's been sensationalized, and for whatever reason everybody loves it.
Yeah, and it's like not just Korea, like they're huge in Japan, right? Like, and usually you guys don't get along.
Yeah, I mean, there's still a bit of beef there right now because of the whole like Japanese, what's it called? Japanese occupying Korea for a little while. There was a the war there, and then now they're denying that's ever happened, and there's a bit of a mess there. But for the most part, like when things were good, people from Japan would come to Korea for a day and then shop and then go home.
Oh.
Yeah, because it's only like an hour flight.
Well, when you understand the K-pop thing, you let me know, because every now and then downtown I wander by something, and then there's all these kids in line, and I find out it's something like the K-pop people are here or something, and it's crazy.
All I know is that
like
K-pop
Justin Bieber.
people all look like the same person. I can't tell them apart. So
Lena, that's racist.
they all look the same. They have the same hair. They have the same makeup. I don't know who's a boy, who's a girl. Like I can't tell.
Aren't they all boys?
K-pop is just a genre. There's like
No,
bunch
but
of
isn't there
different
some band
K-pop
that's
bands.
like the main K-pop band?
There's the one called
I
BTS
did-
that's been like super
that's
huge.
it,
I think
BTS.
They're at the
I just
Grammys or
Googled
something.
it, and they all look like boys to me.
They are, but I mean, if they had long hair, wouldn't they look like girls? Wouldn't you agree?
Actually, there's some that might be girls now that I'm looking at it.
Yeah, exactly.
Actually, I think that, no, honestly, anyways, whatever. We'll leave it to our younger viewers that are more into BTS. To
They do
explain
have
this to me.
catchy tunes. I think that's what it is. They
I
have
gotta
really
Google it.
catchy
I don't know
tunes.
what you guys said.
I know. Well, anyways, listen, it's 6 o'clock. I better go. It's dinner time.
Yeah. All right. Enjoy the rest of the weekend, everyone.
Okay, have a great
Well,
birthday,
happy
Patrick.
birthday, Patrick.
Oh, thanks a
Have
lot.
a great birthday. Take care.
All right, thanks. All right, cheers.
Bye.
guys.